The income statement is a very important document and one of the big three in accounting that give you a good view of what your business is doing and the health of your business. Okay, notice that at the heading that it identifies the business, the financial statement title, and the time period which this is summarized. So this is a income statement for the year end. You would probably have an income statement for each month because your business is not going to last the whole year. Then through the body of the this financial report, notice there are no minus signs, but everything is actually subtracted. So it's the positive amount that you've made subtracted by things that are expenses to you, to your business. And then it draws your eye to the bottom line, which is your net income, which has double line for visibility. The sales revenue is the money that has come in since you've started selling your items. The cost of goods sold is the expense of the actual selling of your items. Now, when you subtract the cost of goods sold from your sales revenue, you get what's called the gross margin under that first line. Now, this next expense is the actual selling and the cost associated with selling, the general and administrative expense. Okay, so the selling, general, and administrative expenses are subtracted from that gross margin number, and then you get your operating earnings. So that's the money you've earned. Once you subtract those administrative expenses, then you have your operating earnings. And that's also called EBIT, which is sometimes referred to as EBIT. Okay, next we have an interest expense, which is if you pay interest on any loans that you have, that's where you put that amount. And you subtract that from your operating earnings, and that gives you earnings before income tax. Okay, now that you have your earnings before income tax, it's time to subtract the income tax expense that you have, and that will give you the net income. So that is the income that is left over after you take all those expenses out.